joining in on the show right now to talk about exactly that. Probal, hi, good morning. Good to have you on the show. Walk us through what your segmental expectation is from RIL this time.
Yeah, just to quickly run through the top line numbers, we are building in about a 15% YOY improvement in operating earnings for the quarter and about a 25% odd improvement in terms of net profits. In terms of the segmental performance, I think it on a YOY basis, I think the OTC segment is expected to probably deliver very strong numbers. We have seen an improvement in refining margins to a certain extent, specifically with respect to Q1 FY25, and petchem numbers are also flat to slightly improved in this quarter. So we expect about 154 billion in EBITDA from that segment against 131 billion in Q1 of FY25. Oil and gas, I think, or upstream, is expected to be flattish to a small decline. Frankly, the fields that had started up a couple of years ago, they are starting to hit their peak and starting to plateau a little bit. So unless some new fields come in, the production, I think, will remain flat to declining, and therefore that segment doesn't see too much of growth. Retail is again another segment that has shown improved trends in the last couple of quarters, and we would expect that trend will continue. So even in retail, we do expect about 16-17% growth in terms of EBITDA. And Jio, of course, continues its march with the higher ARPU and now the subs number improving as well. We expect about 177 billion in EBITDA versus about, I think, 149 odd. That was the number for Q1 of FY25. So fairly decent quarter from a YOY perspective. Sequentially, we don't really expect too much of change. Last quarter itself was a fairly high base. So, overall 44,400 crore of EBITDA and about 19,000 crore of PAT, fairly similar to what they reported in the last quarter.
All right. Hi, Probal. Morning. This is Shrishti also joining again. But what could actually be the exciting factor for Reliance in the times ahead? The reason I ask this, Probal, because for the past 6 to 7, 8 months, or rather 1 year back, it was Jio that was the exciting factor, but now it's turning out to be the retail. Give us some sense that from here on, what could actually take Reliance higher? What could be the exciting factor for this particular counter?
So I think for Jio, I would probably disagree, and I'm sure my telecom analyst Sanjesh would probably also disagree. I think he's very optimistic on the kind of market share that they continue to sort of capture, specifically in the FWA space or the enterprise and broadband space. So the numbers, if you look at consensus, I think Jio is expected to deliver the bulk of the EBITDA improvement for the company over the next 2 to 3 years. Retail, I agree with you that there was a little bit of a slowdown in momentum if you go back to maybe the fourth quarter of FY24, last year, and the first quarter of this year, or rather 3 quarters ago. I think there were a few quarters where the momentum seemed to be slowing down. We have seen an improvement come through in the last couple of quarters, so therefore momentum from this segment can obviously build up. But our sense is that there could be some news flow in the AGM speech that can, specifically on the new energy front, which is now starting to sort of kick off and build a size and scale more akin to what Reliance is used to. So I think it's not really one thing. I think it's multiple things that can actually drive news flow and optimism around the stock. What we continue to look at with a very keen eye is what is happening to the capex number, what is happening to FCF conversion, and what is happening to return ratios, because those two things are obviously lagging the kind of earnings momentum that the company has produced over the last 2 to 3 years, and that's something that remains a little bit of a muted factor as far as we are concerned.
Okay, and Probal, any thoughts on the recent restructuring that we've seen within Reliance Retail, where they've spun off their FMCG business into a new subsidiary? What kind of value unlocking do you think this move could lead to?
I think it's probably early to look at it. I think the retail business continues to see a lot of activity in terms of cleaning out of stores which are not performing. They've also, sort of got rid of brands that sort of are not really performing as well that they would. They brought Shein, back into the country after a long gap. So there is, as I said, I think it's more about the overall strategy continuing to sort of pivot in terms of growing their online business, growing the quick commerce, part of Geo, and also sort of rationalizing and cleaning up unprofitable physical stores, because they obviously have a footprint which is several times that of their near rival. So that brings with it its own advantages, but also can be a drag on growth, as we saw, 3 quarters ago. So I think it's a combination of things. In terms of restructuring, I think we'll have to sort of wait and watch what kind of value can be realized by having that separate arm.
Okay, Probal, great to have you on the show, and we'll analyze the numbers once they're out as well. Good speaking with you as always.
Thank you.